Hello everyone, welcome to another episode in the series of Decoding IPOs by Finance and Investment Cell, Kirori College. This is Tanmay, and for today's video, we have the Indian EdTech giant, Physics Wallah. Let's get to the video. The first thing here that I can see is that it is a book build issue IPO. If you don't know, there are two types of issues. First one is a book build issue in which company, instead of setting a fixed price, sets a price band. For example, the company wants to list the shares between rupees 103 to 109 per share. Then the other one is the fixed price issue in which company fixes a fixed price for the shares to be listed at. Say, for example, rupees 105 per share. Then this issue is a combination of a fresh issue and a offer for sale. Fresh issue basically means that new capital is being pumped up into the company, and offer for sale is when existing investors want to sell their shares. If we look at the timeline of the IPO, the IPO opened on November 11th. The IPO closes on 13th of November. Then allotment is tentatively on 14th of November. Initiation of refunds and credit of shares is on 17th of November. And final listing is tentatively on 18th of November. If we look at the details of IPO, the face value of shares is rupees 1 per share. Then issue price band is rupees 103 to 109 per share. Lot size for minimum application is 137 shares. Then there's the total issue size. And the good thing is that fresh issue makes up the larger part of the total issue, which means that more capital is being pumped up into the company, which will eventually be utilized for growth and investment. If we look at the application requirements for various categories, there's retail investors, minimum limit is one lot, making up 14,933 rupees. Then for retail investors, maximum limit is 13 lots, making up 1,94,129 rupees. Then for SHNIs, the minimum limit is 14 lots, 2,09,062 rupees. And then for maximum limit of SHNIs, 66 lots, making up 9,85,578 rupees. And for BHNIs, the minimum limit is 67 shares, 67 lots, I'm sorry, for 10 lakh 511 rupees. Now, if we get to the financials, yeah, I have the financials for the last 3 years of the company. If you look at assets, they have been showing you green signals. That have been continuously increasing. So 2082 crores, then 2480 crores, then 4156 crores. And in the first quarter of FY26, 5075 crores. That's all good. Then if we look at the total income, it has also been showing growth. 772 CR, then 2001, 2015 CR, then 3039 CR, and in the first quarter of FY26 itself, 905.41 CR. Now, this number might look very impressive that the company has done 905 CRs in revenue in only the first quarter of FY26, but it is not actually that impressive because the peak season for the edtech companies is the first quarter because admissions come. So number is not bad either, but yeah, not that good as it appears. Then, if we look at the profit after tax, the company has been in losses consistently, and a major loss, over 1,000 crore in losses in FY24, 1,131 crores. This is majorly because the company has been focusing on growth and expansion. So, yeah, capex. But there is uncertainty regarding profitability because even in the first quarter of FY26, the company has shown a negative profit of 127 crores. Then if we look at the EBITDA, it is negative for this quarter, for the first quarter of 2026. Last year, it was positive, then negative. Uh, you can look at the net worth of the company as well. Now, if we come to the key performance indicators, the return on net worth is a negative 12.5%. Then profit after tax margin is a negative 8.43%. EBITDA margin is positive 6.69%. And if you look at the price to earning ratio, it is negative 62.06%. Okay. So, if we look at the IPO, let us come to the GMP and subscription. We can see here that the last updated GMP, that is on November 13th, 12:28 p.m., the GMP is zero, which is quite disappointing for a company as big as Physics Wala. Means that there are no listing gains or very minimal listing gains to be expected from this company. The subscription is just 0.266, not very impressive bidding and subscription here as well. So if we want to come to a verdict, let's look at the red flags and the green flags of the issue. Red flags. The issue is a high valuation issue. They are asking for 10x of their revenue, and it is really high for an tech company because the companies have not performed really well on stock markets which have been listed previously. Then the company has negative returns and negative EBITDA. Although losses are narrowing down with time, but still uncertainties are there regarding profitability. If we look at the positive details, there are green flags. The fresh issue is the major part of issues. So the money is getting pumped for growth of business. The machine money will be invested in growth and expansion of the business. And IPO objectives show expansion plans. I'll show you. So yeah, if we come to the yeah. If you look at the objectives of the issue, you can see here the maximum is capital expenditure for new offline centers, then expenditure towards lease payments, capital expenditure for fit outs, then lease payments, investment in subsidiaries, expenditure towards server and cloud related infrastructure costs. So majority of this IPO is going in the growth and expansion of the company, which is a good thing in the long term because the company may attain a greater market share, good profitability, and the share prices will rise eventually. So for long-term investing, the company shows good signals. So whether to invest or not, it is not easy to say anything with a pure surety, but with the available info, we can draw out some conclusions. If you are looking for listing gains, I don't think the IPO is very attractive for you because it has a very low GMP and low subscription rate as well. But the company is a solid business and it is a market leader, so it might give longer better returns in the longer term. So yeah, that was it for today's video. Thank you so much.